One of the greatest myths banks sell us. Your money grows in the bank. A commonly believed but misleading notion promoted by banks is that parking your money in a savings account will grow your wealth. While your bank balance may increase slightly due to interest accrual, the real value of that money, its purchasing power, often diminishes over time, especially in periods of high inflation. In truth, with inflation rising far more rapidly than the interest rates offered by banks, your savings may be silently losing value. Keeping large amounts of cash in traditional savings accounts can actually result in financial erosion, not growth. In this guide, we'll explore 6 asset classes that can preserve your wealth and even help you build generational prosperity. 1. Precious metals. God's money. Gold, silver, and platinum. Throughout history, precious metals have served as reliable stores of value. Unlike fiat currencies that governments can print at will, metals like gold, silver, and platinum are finite in supply and cannot be artificially created. As governments print more currency to cover fiscal deficits, the value of paper money declines. This is precisely why financial experts and the wealthy often allocate a portion of their portfolio to precious metals. They act as a hedge against inflation and currency devaluation. For example, before 1950, an ounce of gold was priced around $400. By 2023, its price had surged beyond $2,000. Forecasts by Prime XBT suggest gold could hit $10,000 per ounce by 2032. That's a 5-fold increase in value over a decade. If you want exposure to gold but don't want to deal with the storage of physical bullion, consider gold ETFs, exchange-traded funds. These financial instruments track the price of gold, offering a convenient, liquid, and affordable way to invest without the hassle of handling physical assets. 2. Industrial commodities. Raw materials with real demand. While scarcity adds to the value of precious metals, their industrial use further enhances their importance. Take silver, for example. It's essential in manufacturing electronics, solar panels, medical devices, and nuclear equipment. Other metals like cobalt, copper, and nickel are also in high demand due to their unique properties. Cobalt, in particular, has seen a meteoric rise in demand because it's a key component in batteries for electric vehicles. Between 2012 and 2022, cobalt's price jumped from $20,000 to over $40,000 per ton, a 100% increase in just 10 years. Investing directly in raw materials isn't feasible for everyone, but exposure is still possible through stocks in mining companies, e.g., Rio Tinto, Vale, mining-focused mutual funds or ETFs, commodity futures and options. These avenues allow retail investors to benefit from the upside of industrial commodities without needing physical storage or logistical expertise. 3. Safe haven currencies. Stability in uncertain time. In a world dominated by fiat currencies, geopolitical and economic stability are crucial to preserving monetary value. This is why ultra-wealthy individuals often choose to deposit funds in Swiss bank accounts. The Swiss franc, CHF, backed by Switzerland's robust economy and political neutrality, has historically acted as a safe haven currency. During crises such as the 2008 global financial meltdown or the Eurozone debt crisis in 2009, investors moved vast amounts of capital into Swiss banks to shield their wealth. More recently, during the Russia-Ukraine conflict, global sanctions pushed Russia to execute trades in CHF instead of USD. This sudden demand propelled the Swiss franc to appreciate significantly, reaching $1.1074 per CHF in early 2023. For retail investors, gaining exposure to such stable currencies is now easier than ever via currency ETFs or through platforms like Forex.com, which allow trading with minimal capital, sometimes as little as $100. 4. Sovereign bonds. Backed by government guarantees. Have you ever noticed the phrase "on the US dollar"? This note is legal tender for all debts, public and private. Since President Nixon took the US off the gold standard in 1971, the value of the dollar, like most global currencies, is now based solely on government trust and credibility. That's where sovereign bonds, or government securities, come in. Backed by a nation's central authority, these instruments are among the safest investment options available. While returns may not be astronomical, they are far more secure than bank interest, particularly if the issuing government has a high credit rating. Examples include US Treasury bills, notes, and bonds, UK gilts, German bonds. You can purchase US government bonds directly through treasurydirect.gov or invest via the secondary market. These options are especially attractive during periods of market uncertainty or economic downturns. 5. Value stocks and dividend mutual funds, steady growth and income. While government securities offer safety, they typically deliver lower returns. For those seeking a balance of growth and risk, value investing is a proven strategy. Unlike speculative growth stocks that rely on unproven technologies, value stocks represent companies with strong fundamentals and consistent cash flow, such as manufacturing firms, energy providers, and established industrial companies. For example, Nucor, a steel production company, serves as a prime example of a value stock with both price stability and dividend payouts. For retail investors who lack the time or expertise to analyze individual stocks, dividend-focused mutual funds are a great alternative. A popular choice is the Vanguard High Dividend Yield Index Fund, VHYAX, which holds a diversified basket of dividend-paying companies and offers a stable source of income. 6. Real estate and land. Tangible assets with enduring value. Land is one of the few assets that doesn't depreciate over time. From agriculture to housing and commercial development, land is a critical and finite resource. With global population on the rise, the demand for real estate is poised to remain strong. Even with events like the 2008 housing crisis, property values have shown resilience. According to Bloomberg, housing prices tripled between 1992 and 2020. You don't need to wait until middle age to invest in property. Nor do you need to be wealthy. You can start small by investing in REITs, real estate investment trusts, like Ventas Inc. VTR, which specializes in healthcare facilities, purchasing rental properties financed through mortgages, where rental income covers expenses and potentially generates profit. These options allow investors to diversify into real estate without the upfront capital required for full property ownership. 7. Collectibles. Unique assets with massive upside potential. This category includes rare and tangible items such as vintage cars, fine art, luxury watches, rare books, and even classic trading cards. Unlike mass-produced items, collectibles often increase in value over time due to rarity, demand, and cultural significance. For instance, a 1955 Mercedes-Benz 300 SLR Uhlenhaut Coupe was sold for a staggering €135 million in 2022. Likewise, Leonardo da Vinci's Salvator Mundi fetched $450 million at a Christie's auction in 2017. These assets are not just luxuries, they are alternative investments often used by the ultra-wealthy to preserve and grow wealth across generations. However, average investors can still get involved. Online platforms such as Whatnot for collectibles and memorabilia, Rally, Convi, or Masterworks for fractional ownership in rare items or artworks. These services democratize access to collectible markets by allowing users to invest with as little as $10 or $100. Conclusion. Don't let inflation rob you. Silently trusting your bank to grow your money is a misguided belief in today's economic climate. With inflation outpacing bank interest rates, the real purchasing power of your money erodes over time. To protect and grow your wealth, especially with a long-term, generational perspective, diversification is essential. By investing across precious metals, industrial commodities, real estate, stable currencies, government securities, and alternative assets, you can build a portfolio that stands resilient against economic downturns and creates lasting value for generations to come.